Hi there, welcome to Kneppy Invest. Today I bring you a small cap company. In fact, I'll probably describe this company as micro cap with a market cap of less than $20 million, yet this company is profitable. And this company has also seen some pretty good growth in their revenue per share over the past few years and expected to grow their revenue in financial year 23. This company is SKS Technologies. They engage in the design, supply, and installation of audio-visual, electrical, and communication information technology products and services. So let's get stuck into looking at SKS Technologies. I will probably describe SKS Technologies as a low quality company simply because it is really small in terms of valuation, hasn't been profitable all that long. It went through a restructuring in the business a few years ago. It also has gone through a couple of name changes over the past 4 years. So, with low quality companies, I really look at the trend in the share price. And not only do I look at the trend in the share price, I also look at volume. If I start to see increasing volume, that is telling me there are portions of the market becoming interested in this company. And right now, we have seen the share price take a bit of a dive over the past few weeks. And probably the other thing to note with SKS Technologies, shares are illiquidly traded. So sometimes you will see the share price rise or drop by a meaningful amount on fairly low volume. So there are a few things going against SKS Technologies. But the main reason I want to talk about this company is because they are profitable and they do expect significant growth in the revenue in financial year 23. SKS Technologies has gone through a couple of name changes over the past 4 years. Before July 2018, they were known as Stokes. Then they changed the name to Anyvest, Energy with Vision. In fact, I had no idea they had changed the name because I wasn't really following this company all that closely. And then after they went through the restructuring, they changed the name to SKS Technologies in January 2021. SKS Technologies went through their restructuring in financial year 20, so around the time of COVID-19, and this is taken from a presentation back during that year. So they sold some businesses, bought some businesses, reduced executive director salaries by 60%. They began an overall of IT infrastructure saving 150,000 Ks per annum, announced a capital raising, $1.5 million capital raising, and commenced the process to shift to a more economical cloud-based accounting system. So just based off what's been happening with this company over the past year, 2 years, and what is expected to happen in financial year 23, it does seem like this restructuring has been successful. Now, whether it is overwhelmingly successful remains to be seen. We need to see the valuation of this company increase from here. That's the main thing I'd like to see. But I'd also like to see this company not only increase their revenue, but also increase their profit, become operating cash flow and free cash flow positive on a consistent basis. SKS Technologies has a lot going on. I already mentioned what they do in the first slide, the introductory slide of this video. But some of the things they actually do when you really dig a little bit deeper include display and projector systems, interactive whiteboards, specialized control lighting, converged networks, digital twins, energy audits, energy savings timers and sensors, energy monitoring, desktop power and data works, light level audits, exit and emergency light tests, general lighting and power, high voltage systems, earthing systems, voice and data structured cabling, optical fiber and copper, and cable networking auditing. If you do go to SKS Technologies, they do have a list of all their projects, maybe not all their projects, but some of their projects they have completed over the past few years. They also have a list of their clients. And if you have a look at their clients, that is a very impressive client list. And in fact, I'll do have a slide later in this video that looks at their client list, and it is an impressive client list. And here is one of those projects they do mention or did mention in there or on their website in regards to Western Hotels in Perth, Western Australia. They provided state-of-the-art audio-visual equipment, the background music system piped through the hotel, and also the IPTV system commissioned by the company services all 368 guest rooms, providing a full suite of free-to-air TV, 20 Foxtel channels, and digital radio with a large selection of movies on demand. And here is SKS Technologies' impressive end user customer list, including Disney Plus, Zoom, Dropbox, Westpac, Pexar, Carlton United Breweries, Pinterest, Airbnb, Red Bull, Alibaba, Okta, Warner Music Group, QBE, and Toyota. The first thing I thought of when I saw this client list is just the margins in this company. So when they win a new contract or win some work, more than likely the margins in that contract are going to be very small, because I would assume this is a very competitive space. So even though the revenue is increasing at a very impressive rate, more than likely the margins are quite low. So a lot of that increase in revenue won't translate to the bottom line, or if it does translate to the bottom line, the increase in profits are going to be much smaller than the increase in revenue. The current CEO of SKS Technologies is Matthew Jinks, and he has had a very impressive rise up the corporate ladder, because he began his journey as an apprentice electrician for the KML Group. He was a qualified electrician from January 2000 to December 2007, became a contracts manager with KML Group in 2007, became an executive general manager of finance in KML Group in July 2010, then became the chief operating officer of Innoverse in May 2013. Then he became the Chief Executive Officer or CEO of SKS Technologies in February 2021. So he's one of the beneficiaries of this company going through the restructuring. At that point in time, he was a Chief Operating Officer. So more than likely, he had a big say on how this company was going to go through that restructuring program. And it seems at this point in time, it is looking like it could be a very, maybe not very, but a successful restructuring program. And more than likely, Matthew Jinks would have played a very strong part in that program. Now on to the financial year 22 results for SKS Technologies. At a share price of 15 cents, the market cap of this company is 16 million. As I'm recording this video, at the end of trading on December 22, the share price is 16.5 cents. Now, the share price has been 16.5 cents for a few days, because no shares have been traded in this company since December 19th, which means this is a fairly illiquidly traded company. That's the very definition of illiquidly traded, which means if you want to get in and out of this company fairly quickly, you do have to be wary. In fact, I would say if you do want to get in and out, this is not the company for you. Because if you desperately want to buy some shares in this company, you'd have to pay 24 cents right now, because that is the first sell in the order. That means at a share price of 16.5 cents, you'd have to pay a fairly large premium if you want to take a position in this company right now. So anyway, the market cap of this company is fairly low, around about $18 million at a share price of 16.5 cents. Now on to the financial year 22 numbers. Revenue, 67.3 million, significantly higher than financial year 21, and they do expect financial year 23 revenue to be significantly higher by about 50% from 67.3 million. Profit, $3 million. That does include an income tax benefit of $1 million. So the real profit was about $2 million. However, the company was operating cash flow and free cash flow negative. I'll talk about why in a second. Operating cash flow negative by 1.4 million and free cash flow negative by 2.2 million. So I want to understand why there was a difference between profit and operating cash flow. And if you go to note 23, which is a reconciliation of cash flow from operations with profit after income tax, you get your answers in this particular statement or this particular note. And the answers revolve around changes in working capital, which is found in the second half down the bottom of this particular note. Now, the main reason there was a significant change in working capital was because of a significant increase in trade and other receivables, a $9.3 million increase in that. That means this company has a fair bit of cash expected to come in their coffers over the next few months. There was also an increase in trade and other payables, but that was only $4.8 million. So if you take into account the changes in trade and other receivables and payables, that amounts to something like $3 or $4.5 million. If you add that back to the operating cash flow negative state, which was $895,000 negative, that means that increases to $3.5 million positive, which is closer to the profit. So that's the reasons why this company was operating cash flow negative, just a significant change in working capital. Now onto the revenue history for the company. This goes all the way back to 2012. And to be honest with you, between 2012 and 2016 or even 17, not very impressive. So revenue was going sideways. In fact, a massive decrease in 2014 and 15, barely any revenue at all. But then we started to see revenue climb fairly slowly from $15 million in 2016 to $35.6 million in 2021, the year after they went through the restructuring. And then revenue has increased from 35.6 million to 67.2 million. The other thing I included here is gross margins, and we've also seen gross margins increase over the past few years. Now, one of the reasons behind the increase in revenue from last year to this year is because of acquisition. So there has been a corresponding increase in shares on issue as well, but I'll talk about that and why that's not an issue later in the video. One of the main reasons I wanted to have a look at SKS Technologies is based around their September quarter Appendix 4C. Receipts to customers 26.1 million, but this company was operating cash flow positive by $2 million. So that could be because of changes in working capital. That could be because of that cash flow coming from receivables coming into the bank for SKS Technologies. The other thing to note here is the cash on hand. Only $206,000 cash on hand. So if you don't know anything else, you might be thinking this company would be doing or might be susceptible to doing a capital raising to increase the cash on hand. This company does have facilities or financing facilities to take into account changes in working capital. So wouldn't be deterred by that cash on hand. They also repaid $1.5 million of debt by their operating cash flow. So that's exactly what I want to see from management on how they deal with the operating cash flow positive state of the company, repay debt. I've already mentioned that this company has acquired a few companies over the past few years, which means shares on issue have increased. In fact, shares on issue have increased by 2.5 times since the start of financial year 19. But thankfully, the increase in shares on issue has been lower than the growth in all earnings metrics: sales, EBITDA, net profit before tax, and net profit after tax. And of course, all those are on a per share basis. So they have outperformed the growth in issued capital, which means, and I should say here, emphasizing the quality of the new earnings. And not only that, the profit after tax has increased at 26% more than the increase in shares. SKS Technologies did see a pretty good increase in revenue from financial year 21. In fact, it almost doubled. And they are expecting some more growth in revenue in financial year 23. In fact, their target for revenue in this financial year is $90 million. They also mention in the commentary they are focusing on organic growth. So that's very important moving forward, that the company is not relying on acquisitions. They are focusing on organic growth. Now onto the chart, daily chart for SKS Technologies. This goes back to the middle of 2019. So we have about 3.5 years of history here. Now, because the shares in this company are illiquidly traded, we are able to fit 3.5 years of trading without it feeling or looking squashed. And that's because in TradingView platform, they don't include those days when shares aren't traded, which is a little bit different than CommSec. Now, there has been a little bit of a dip in the share price of this company over the past month. In fact, shares have dropped from 27.5 cents down to 16.5 cents since the start of October. In fact, that share price of 27.5 cents was a 3.5-year high in the share price. So there was some positive sentiment behind this company back then. That positive sentiment has dried off. And the only reason it really has dried off is just because the shares in this company are illiquidly traded. Some of the investors might have seen the drop in share price, got a little bit nervous, and then they sold. And because the shares are illiquidly traded, they more than likely, as they panicked, had to sell at a discount. But we did see a little bit of buying coming in when the share price got below 15 cents. So it does seem like around about 15 cents or just lower than 15 cents is a pretty good support level for SKS Technologies. That's all I have. A look at SKS Technologies, a micro-cap profitable company on the ASX, also growing in terms of revenue per share. And I think the main thing moving forward for this company is sort of proving their business model right now. So they did go through that restructuring a few years ago, and it does look like it is successful. But I think the market right now is not convinced, and the market wants to be convinced. So right now, you can buy this company fairly cheaply at a valuation less than $20 million. They are profitable, and in the first quarter of financial year 23, the September quarter, this company was operating cash flow positive by over $2 million. So if you have any questions about this company, any thoughts, just leave in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.